Welcome to Fisher Webinars. The following is a recording of the European Containerboard Market, originally recorded on Thursday, April 12, 2018.
And welcome to all of you around the world that today are joining us for this session on the European Containerboard Market. We are currently experiencing golden times for the European Containerboard Market. It's strong demand, we have high prices, we have low OCC cost. All of this gives stable profits. And it's easy to be optimistic in such a positive environment, and we can see many announcements for capacity growth coming. But nothing lasts forever. So what will happen when times get tougher? Let's start to look at where the growth actually comes from. And as we said, market demand is strong, and it has been a lot of investments in capacity growth, mainly for top quality tiers of testliner. But we also see some capacity growth coming from the fact that there are producers in other grades, mainly printing and writing and newsprint, that are converting their machines because they want to flee away from a market with declining grades. And these producers maybe are not always too overly concerned about potentially building up overcapacity in containerboard. And I think that's an important thing to remember. All of this extra capacity then, what can you do with that? Can you replace the imported kraftliner? Actually, the opportunities for that are probably relatively limited due to quality requirements and price. And if you turn it around and say, can we export it? It's also unlikely that that will increase dramatically due to the uncompetitive position that Europe has regarding cost. So what we will see coming up is actually a pressure for shutdowns on smaller, less efficient machines. And there are quite a lot of small machines in Europe, as we're going to see later. If we take a look a couple of years back and then a couple of years forward, and we look at the capacity development for the different finished products from containerboard, we can see that it looks good. Both testliner and kraftliner have had a CAGR and a forecasted CAGR of about 5%. So that's quite healthy. If you look at it in a global perspective, and by doing that, let's take out China, because China is in a class by itself and everything else gets distorted if you put China in the picture. So this chart is now capacity change since 2016 and then forecasted into 2020, or actually it's announced capacity change for 2018 to 2020. And as you can see here, the blue part, which is Europe, takes up quite a big part of the overall increase. We have an overall increase of about 6 million tons this year. Europe alone stands for half of that, 3 million tons, excluding China again. And so especially here in 2018, Europe has a big share of the overall growth. And of course, you can say that some of the capacity that now shows in 2018 maybe depending on how the projects get to be completed, finished, may move into 2019. But it still remains a fact that Europe has a very big part of the overall growth. And in 2020, you can see the announcement for growth are already quite high in Europe. So if you look then at this European growth, this is not only Europe, then we can see that almost everything, about 90%, is recycled containerboard. And so we have the kraftliner, a mere 3%, and semi-chemical fluting, 7%. So not a lot. Another thing we can see from this chart is that these grades of testliner, these more advanced grade, if I can express it like that, white top and coated white top, they are actually overrepresented because that's not how big their share of the market is today. So they are growing faster than the market right now. Almost half of all this new capacity this year will come from rebuilt machines. And that makes sense, since to rebuild machines is actually an attractive way of growing capacity, since it often offers a lower investment option versus a new machine. So about half through rebuilds, a third on start of new machines, and then you have maybe 15 to 20% on second-hand machines that are starting up. So that's the structure of how the growth is coming. I mean, and if we take the next slide, that will offer a closer look where we can see the various lines. So each of the colors represent an individual line. And then you can see that all this capacity that's coming from rebuilds, it's actually only 3 machines. So the average added capacity is high for these rebuild machines. Geographically, Germany takes up a very big portion of the added capacity, and also the southern nations, Spain, Italy, and I'm adding Turkey into that. I mean, that's basically the 4 main markets where the new capacity is coming in 2018. There are some clear and important differences for containerboard between Europe and the US. So let's spend just a few minutes on that before we move on. If you look down at the bottom chart here, you can see the split by finished product between Europe and North America. And we have the kraftliner comparison here, where kraftliner is a small portion of the European market and a big portion, about half of the American market. And then, of course, it gets to be reversed when we look at the testliner. Quite big in Europe and not that big in North America. Another interesting thing to note here is actually these smaller grade. What they have down here at the bottom, that's the coated white top testliner and kraftliner, and up here we have the white top testliner, kraftliner. And you can see they are hardly represented in North America. So that's another interesting little difference that we have here. So taking this, it's very logical that we will have this type of furnished split and difference between Europe and North America that you see in this upper right chart, where Europe is predominantly using recycled fiber, and in North America on the other side, it's about 50-50 between recycled fiber and virgin fiber. Also logical is then that we have a difference in the basis weight between North America, expressed in gram, it's 192 grams per square meter, and in Europe it's considerably less. And this is of course driven a lot from the fact that Europe produces more testliner than kraftliner. Kraftliner traditionally tend to have a higher grammage, but we probably also can see this as an effect of that in Europe over the last years have been working hard with some producers have worked hard on reducing the basis weight, and I think it's safe to say that Europe may be a little bit ahead of the US on that type of value engineering. If you look at the fiber origin, we have in Europe 80% are northern species, and in North America 80% is around 80% is southern species. So it's which is of course reflecting the availability of wood in those two regions. Interesting, I think, is to note actually that we have broad fiber represents the same percentage in both North America and Europe. And please note, this is kraftliner we're talking about. But will the good times last? The longevity of good times depends on a number of factors, of course. And I think these are the four important factors that we should talk about. What will happen with overall demand of containerboard? What will happen with the US export of kraftliner? Will it increase or will it stagnate? And how much new capacity will be added because people are converting machines in declining grades, publication paper mainly. And how many small machines will end up closing in Europe? These are the most important factors I think we need to consider. So if you start with demand, it's strong. But there are some potential obstacles ahead or uncertainties ahead. We know that the demand is increasing due to an overall strong economy across most countries. And we have the rise of e-commerce. E-commerce is behind the US. We are a number of years behind the US, so we can actually look at the US and try to predict what's going to happen in Europe too. And given the low penetration we have in Europe compared with the US, we can say that e-commerce will continue to grow for a number of years. And this is, of course, positive for the packaging demand. But eventually, the packaging cost will start to become an issue because the value of the shipments tend to go down as e-commerce get more and more established. And that means that the cost share of packaging increases. And there will be pressure for lower cost solutions that may force package redesign or other actions to take out that cost out of the value chain. So when that happens, how well and how swift will the containerboard industry be able to adapt to these new market conditions and rules? And will there be players who are able to be proactive in this area? That will probably be the winners, the ones that can start on that change earlier. Then finally, we have a big uncertainty, and there are a number of economists around the globe that fear that the current global trade disputes could lead to reduced global trade, which then would have severe and unpredictable consequences for the economy. So that's an uncertainty we have to live with. If you look at trade, trade of containerboard between the US and Europe has been fairly constant over the last years. As you can see, Europe is importing considerably more than Europe is exporting to the US. And this chart down here at the bottom shows for the last 6 years the US exports to Europe, and you can see it's been rather stable. Has not been a lot of changes. Out of the export from the US to Europe, well above 80%, probably closer to 90% of that is kraftliner. And if you put that amount then of kraftliner in relation to the European capacity of kraftliner, which is about 3.6 million, then it means that on top of our own production in Europe of kraftliner, we have an import of an additional 18, 19, 20% of kraftliner. So quite a lot. Although, as I showed on the previous slide, the export from the US have been relatively stable, I think there are some reasons that would suggest that the imports from the US actually could increase. And most important, of course, is what happens in the US, what's going to be the state of the American market, how will it develop, what's going to happen with e-commerce, the events and the disputes with China. Fisher has worked a lot on these type of issues, and we're building models to try to predict different future market developments. There are 3 underlying market conditions that actually drive the US kraftliner export. First, Europe has a shortage of kraftliner. And even if a lot of kraftliner in Europe is substituted by top quality testliner, it's not always possible to substitute kraftliner in all areas. So that's the number 1 condition. The number 2 is that Europe has a cost disadvantage. mainly driven from fiber and energy cost. And this disadvantage will not disappear in a short and mid-term perspective. So that's going to remain. And thirdly, the possibility to do kraftliner conversions in the US appears to be more favorable than to do them in Europe. We've done lots of studies on this, comparing the potential lines that could be converted. And some of those rebuilds in the US of added capacity could be interesting for exports to Europe. And let's just dwell a little bit more on this issue about machine conversions. It's attractive because it's less expensive than to buy a new machine, but the fact remains that only a few of these are viable. I mean, for example, this chart here, this map here shows integrated crafts mills in Europe with operating and shut-down machines that potentially could be suitable for conversion. But a closer look at it actually leaves only a few of them as viable. So let's come to the cost disadvantage we mentioned on an earlier slide here. European linerboard is not cost competitive in comparison with the US. This chart, you read the following way. The left part of the chart is kraftliner. The right side of the chart is testliner. It's a cost curve by country, meaning that each of the bars is a country. The green bars are European countries. The red ones are North American countries. And as you can see, we have on kraftliner a clear advantage of the US compared with the other nations in Europe producing kraftliner. We have a couple here on the left side, but it's mainly Russia. Russia has a very competitive position on that. And on testliner, it's the same picture. On testliner, actually, we have Canada in the picture too. There is no Canadian kraftliner production, so they are missing there, but here they are. And you can see clearly too, they have a cost advantage over most of the European countries. And the cost gap between the North American producers and the European ones are in many cases so big that it exceeds the transportation cost, and it therefore provides opportunities for exports to Europe. The cost disadvantage that Europe has is mainly caused by fiber and energy. The top chart here shows it by fiber cost. And again, the green country here on the left side, that's Russia with a very low fiber cost. But you can see the other ones have higher cost than North America. And on testliner, US is clearly in a better position on fiber too. Energy, a similar picture, where Europe has a disadvantage over North America. Comparing the two cost curves between North America, the red part, and the European mills on the left side, green, you can see that the cost curve is much flatter in the US. It's quite steep in Europe. And the flatter the cost curve is, the consequence, of course, is that you have a very small cost difference between the high-cost producers and the low-cost producers. As we move on, and we're going to have line closures in Europe, and companies here on mills here on the right side are going to disappear. The cost curve will move down. It's going to put also downward pressure on pricing. A restructuring of the European containerboard industry is bound to happen. Question is how fast and it will happen. And why is that? Why do we expect this restructuring to happen? And as illustrated by this chart, you can see that the European containerboard is highly fragmented. I mean, each of the colors here represent a corporation producing containerboard. So this is the European picture. That's the North American picture. Highly consolidated in North America, and in Europe, it's very, very fragmented. If you look a little bit closer on who these companies could be and I mean how they are structured, we will see that most European containerboard corporations are small and private, and very often they're actually single site or even single line. The bar height here represents the number of corporations, and in Europe you can see it's just astonishing the number of private corporations that we have. In the US, I mean, the private corporations still exceed the number of public, but it's a very relatively small gap between them. So in Europe, 2/3 of the production of containerboard is actually private hands. And in the US, it's about reversed. 72% is in public companies' hands. So a consolidation of the European market will happen, but it will take time and it will require multiple mergers. I mean, this beautiful circle here representing capacity shares by corporations makes it clear that if you would like to get a 30% capacity share of the market, you would have to at least merge a minimum of 4 players. I'm here highlighting, if I take the 4 largest player, that would just make it to be a, what you would say, a clear capacity share leadership of 30%. On the left side of the chart, we have all the small players with a very, very small capacity share. We're going to start to see mergers among these unless they totally got the business. They will start to couple up. But that may actually take a little bit longer, maybe a little bit slower process to merger here, since you are talking about family-owned companies with a history or a legacy over many generations. So who is the most likely to drive this consolidation in Europe? We have, of course, the Americans. The US market, containerboard market, is very consolidated. It offers limited opportunities to grow your share. So looking over to Europe, you have, of course, big possibilities for major growth by acquisitions. You can get that in Europe. So that's one driver for the Americans to look outside of the US. The Europeans, on the other side, I think we have going to see an increased pressure on the European players, the public players, public corporations, to be part of the consolidation of the market. I mean, we have seen over the last couple of months 2 attempts from International Paper to acquire Smurfit Kappa. That was unsuccessful. But I think we will have a situation where, I don't expect that we will see the European players sitting on the sideline and sort of just passively look at how the consolidation will go on. So it's better to be proactive than to be passive in this environment. And talking about IP, it's probably very unlikely that they will not continue to seek other acquisition opportunities in Europe, although they didn't succeed in the past bids for Smurfit. We also have a need in Europe actually to increase the forward integration of corrugators with the paper producers themselves. Then we have the Chinese. The Chinese have recently shown a lot of interest in the European pulp and paper industry. It's been mainly focusing on the pulp side and to secure pulp supply. But this could change. So there are actually quite a lot of people who could have an interest in would like to be an active part of the consolidation. But times are good right now. And when times are good, profits tend to be good, and this may drive up the company valuations, and which may slightly damper M&A activity. But as soon as we come into another business cycle, the evaluations will go down and we may see more activity on that side. Although this paper is focused on, or this presentation is focused on the paper part of the industry, it's very important to remember that added paper production assets alone is by no means a guarantee for success in this industry. You need to consider, of course, the whole value chain, the paper itself, the corrugators, and a good and solid go-to-market organization with good end customer relationships. That is crucial. And we are not talking too much about this in this presentation, but let's not forget that this is needed for sustainable success. The degree of forward integration with corrugators in Europe is only about 50%. And if you look at the US, we actually have 80% integration. So in Europe, every second one or half of the corrugators are independent. It complicates also the value chain and how you manage that as a player in this industry. So what will happen with that moving on now? Are we going to see how fast will the reduction be of the independent corrugators, and who will drive that forward integration more successfully? But it's not only about adding paper capacity. It's a lot about also replacing smaller, less efficient machines. Europe has many small machines, as you can see from this chart. The darker green part is the number of European machines, and the first bracket here is up to 100,000 production, line production, 100,000 metric tons. And you can see a huge number in Europe. And also in the consecutive two brackets here of line size, Europe has a high number of small machines. And so when will we start to see the first announcements in Europe that sort of come close to this one that is just a few weeks old from Westrock in the US, where they're actually replacing in one move 3 narrow machines with one larger machine. So we have to catch up on this in Europe too, to get that consolidation going. A good way to assess the strength of an asset, whether it's a line or whether it's a site, is to use viability benchmarking. Viability benchmarking assesses the relative strength that you have in a peer group, and you consider then at the same time a number of factors. So it's not only cost. Cost is important, as we know. But I mean, we can look at a number of other factors too and assess the relative strengths. The size, the capital requirements to keep this line or a site running, the productivity, the tech age, its location, of course, is very important, and also in what company portfolio does these assets sit. Some assets may be weak in one company, but if it would land in the portfolio of another company, it would actually be considered to be quite strong. So a chart like this, a viability benchmark chart, then shows what sites have higher risk for closure or trouble in the future. And if we now focus in on this part of the high risk sites that I have it on the right side, and so now we're only looking at the high risk ones. And what does that tell us? It tells us, first of all, here from the upper left chart here, that most of those are private. All the gray bars here are private. There's still some public companies that are in high risk, but most are private. And if I then look at it by geography, I very fast can see that the high risk assets are actually spread over a big number of countries. So it's not that these assets would only be located in France or Sweden or so. It actually cuts across most markets. So that's interesting. So we have a need to do things all across the continent. So, time flies. Let's try to summarize what we have talked about so far. We have a strong industry. It's a complex environment, and we can expect a lot of things to happen in the near and mid-term future. We are enjoying good times now. We have a good climate, but it will not last indefinitely. We have good capacity growth, not only driven by a good market outlook, but also driven from a strong move to convert machines in declining rates. We have a non-competitive cost position in Europe, mainly driven by high fiber and energy cost. And we have a very fragmented market with many, many small and privately owned companies and a relatively low degree of forward integration. Consolidation is bound to happen along the whole region in a number of different ways. Fisher works and provides insights and models to understand and predict market developments in complex environments like this one. So if you're interested in talking a little bit more with us about this, we would look forward to talk to you